Now, if you look at the equity side, which reflect the changing of the moods, you have to look at things in a longer term, medium term, and short term. If you look at the longer term picture, you see that oil prices only started increasing in around 2009 or so, 2008-9. Before that, they were below what they are today. What we saw in the equities markets in the region was strong growth from 2001 till the financial crisis in 2008, the global financial crisis, which in effect hit our region in a similar manner on the equities side. What we saw at that time is that the oil prices were not as influential as they are today. In the past, post-financial crisis, oil prices went up to above $100 levels, and equity markets had a generally volatile period between 2010 and 2013. But in 2013, we saw all markets in the region grow, almost all grow by double-digit numbers, especially in the Gulf. Kuwait maybe was one of the markets that was below double-digit at 8.5% or so. So we were coming off a good year in 2013 with oil prices being high, government expenditure going, a lot of planning for government expenditure in Kuwait, in the region. We entered into 2014. The first half of 2014 was the first quarter of 2014 went similar to 2013. Then you had a number of global events, a number of regional events that basically caused a slowdown in the growth of the equity markets. That slowdown started to become more apparent in the second half of the year. And this, in 2014, the summer period is generally quieter. The Ramadan was in that period, and basically markets slowed down in the third quarter. And at that time, oil prices started to fall. Today, in December 2014, we have had 5 months of oil prices going down to significant levels. What that has done has highlighted some of the weaknesses maybe in the markets in the region. When I say weaknesses, we talk about depth and breadth of equity markets, a retail-dominated market. Retail being more of a shorter-term nature, see the oil prices falling, have a fear factor incorporated into their decision-making, and basically you see people exiting markets fearing that the oil prices going down are an indicator of worry and basically fear. So those markets struggled until with the end of the year, with the end of 2014, and we expect that such fears and such downturns to be in 2015 hopefully gone by then. How we see this? First of all, oil prices should stabilize somehow. With that stabilization, you will get people going from negative sentiment to positive sentiment. You will have earnings announced for companies that will reflect growth. In Kuwaiti, companies have had until the third quarter of 2014 around 2.8% growth. We expect the year to end in a similar manner, but 2015 we expect growth in earnings to be in double-digit range in the region. That will show quarter on quarter and will give more confidence to investors with stability. Prerequisites, of course, that the government expenditure plans in the region and Kuwait move ahead. The geopolitical situation stabilizes. So government expenditure, geopolitical stabilization, investor confidence will move more from negative to positive. Companies will increase performance. Again, nascent markets, double-digit growth is to be seen across the board, across sectors. Some of the sectors that will have benefit because of expected infrastructure spending will be the banking, financial sector, insurance sector, the defensive sectors, healthcare, education, as they go. Some of the sectors that had good performance in 2013 and 14 were more related to the consumer side, because we've had stronger purchasing power by populations, and that has resulted in more expenditure there. But now infrastructure spending will start to have its impact during 2015. So we're positive, especially I think more so on the second half of 2015. So the first half of 2015, we are hoping for stabilization of markets and return to growth. And the second half of 2015, more growth.